Welcome to a new discussion panel of the Martin Center Network 2018. Obviously, I would like also to thank the Martin Center for giving us, the FAES Foundation, the opportunity to organize a new panel, a new discussion panel, once again for the third year in a row. Today we are going to talk about the energy transition toward a carbonless economy, and more specifically about the big economic implications of this this big challenge, European challenge. Let me make some few brief comments about the debate in order to focus it, and before introducing and giving the floor to our panelists. As you all know, we, the Europeans, have decided to transform our energy system to fight against climate change. This is a big common purpose. At least in my opinion, it's only comparable with other steps done in the past, such as the launch of the single currency. It's evident that this step will have consequences, implications in our daily lives. We have to change the way we move around through the massive introduction of vehicles, electric vehicles. We must change the way we heat our homes. And obviously, we need to change the way we produce electricity. But there are other implications, not so evident, geostrategic implications, reducing or even eliminating the dependency of the European Union of third countries' energy sources, the Russian gas or the Algerian gas are cases in point, and obviously economic implications. The energy transformation means overhauling the power markets from, for example, from a variable cost approach to a fixed cost approach, or from a centralized way of generating electricity to a decentralized one. All these changes will have a major impact on the energy costs of our business, of our companies. And we have to remember that these companies, European companies, are competing in the global market. And so they'll have, in global markets, obviously with other countries, with other companies from other countries, which are not so committed to fighting the global warming. The FAES Foundation has just released a paper on this issue. One of the main conclusions of this paper is that we believe that the energy transition is a process, obviously seeking sustainability, but for this to happen, we need to make the process itself sustainable, economically, socially, and environmentally. So that means to keep the balance between the three main objectives of the energy policy, which are, as you all know, the protection of the environment, the security of supply, and obviously competitiveness. Having said that, I'm very happy to have a great panel today with us. I'm going to introduce the speaker, the panelists. We have Isaac Valero, which is member of the cabinet of Miguel Arias Cañete, the European Union Climate Action and Energy Commissioner. We have also Alexander Arf, Director of Industrial Affairs at Business Europe, and Christian Egenhofer, Senior Research Fellow at CEPS, the Center of European Policy Studies, if that's correct, and Director at CEPS, Energy Climate House. Well, the three of them are going to give us a different angle of the energy transition. One institutional angle from the European Commission, the company or the business angle from Business Europe, a more, let's say, more academic angle from FEPS. So let us get into the topic. Okay, Isaac, the floor is yours.
Well, thank you very much, Miguel, and thank you very much to the Martin Center and the FAES Foundation for inviting the European Commission to this panel. With Alexander and Christian, we'll try to bring different perspectives into what the energy transition and climate change is all about. You will allow me to focus my intervention mainly on the institutional aspects, so the boring part of the energy transition, yet very important, regulatory toolbox, and a number of enabling measures that this Commission has, for the first time ever, put forward as one of the flagship projects of this Juncker Commission. So you know that President Juncker, when he took when he took office back in November 2014, identified energy union with a climate forward-looking policy as one of the main priorities of this Commission, out of the 10 main political priorities. This basically means that well, it means a lot of work, a lot of excitement, and a new way to address the climate and energy challenges of Europe. Let's put things into perspective. I mean, the European Union was already a global climate and clean investment or clean technology sustainability leader. But we need President Juncker and this Commission decided that we need a deep transformation of our own energy system to really make sure that we were reaping all the benefits of the low-carbon economy. How can we make sure that this happens? Well, what the European Commission has done since the beginning of this of the mandate has been to basically table all the necessary legislation to meet the 2030 climate and energy goals, and even go farther. So we have already agreed all the necessary legislation to meet our 40% target by 2030 on both sectors covered by the carbon market and those outside of the carbon market. We have already tabled all the necessary legislation that is now on ongoing negotiations between the Council and the Parliament, as you will know, on renewables and energy efficiency. The Commission went even a bit farther than what it was expected, for example, on energy efficiency, and tabled a proposal of a 30% target on energy efficiency. What it was agreed back in 2014 was a 27% energy efficiency target with a view to 30%. But it was with a view to, not 30 straight on. So now, with all this legislation, without going into all the details, Europe should be well equipped to meet its targets. At the same time, we needed a drastic overhaul of the way we produce and generate electricity in Europe. That is absolutely clear. So what we did was to basically present two different elements. Change the hardware and change the software. On the hardware, what is the hardware in the energy transition? Interconnections. It is absolutely impossible to meet our climate and energy targets without European markets interconnected. At this point, we lack in some parts of Europe the necessary electricity interconnections. We'll talk about energy supply and gas a bit later, but some parts of Europe are definitely not interconnected. The Iberian Peninsula, it's a very clear example of energy isolation in Europe. So steps have been taken in this European Commission to address this issue, and at this point, let's say, electricity cables and interconnections are being built between Spain and France and Spain and Portugal. This is one very clear example that will allow us to meet the 10% electricity interconnection objective that the European Union set for itself for 2020. So that is one of the main elements. Why electricity interconnection are important? Because if you really want to increase the share of renewables in the electricity mix, you better have interconnections and electricity and renewable electricity flowing freely. That will allow the penetration of renewables. Else, it gets stuck, and investments don't flow. It's simple. So that is the hardware. What about the software? What we have presented is a far-reaching legislation to overhaul the electricity market as we know it. And there are a number of technical elements there, like network codes, but basically the whole idea is harmonization of all the different rules, tools, and measures to make sure that we have one single energy market, which is not the case at this point. I mean, energy and electricity should be commodities that should basically flow freely within Europe. All this legislation is now being discussed. So what this Commission has done is a regulatory toolbox of measures to achieve our targets. But we all know that measures alone and targets alone do not sometimes deliver the expected results. You need to have accompanying measures. You need to have an enabling investment framework. This is what business are talking about. This is what business and the business sector is always demanding, at least to the regulators, the decision makers. What they're saying is that yes, targets give us predictability, so we know where the sense of direction is. But where do we get the investments from? How can we unlock the investments? There, this commission has strategies to address also this shortfall of investments in the clean energy transition in Europe with a number of initiatives together with the European Investment Bank, like the Juncker plan, you all know it, that is set to mobilize €500 billion by 2020. Out of this, around 40% of the infrastructure sort of window, as we call it, so investment pot of the Juncker plan, investment plan, will be dedicated to climate action. So 40% of that. That is definitely quite a sound amount of money for investments in electricity and energy transition. Take another example, smart finance for small buildings. What is that? Well, it's a new investment facility created together with the European Investment Bank to basically invest in the renovation of the building stock in Europe, which accounts for around like 80% or 40% of energy misuse in Europe. So that is one of the tools that we are putting on the table. So my main point here is that regulation works, but it has always need to be accompanied by the necessary investment tools for companies to reap all the benefits. That is a bit kind of like a wrap-up of what we have done over the last few years. But maybe most interestingly for you and for the stakeholder is, so what's next? What are the two big challenges that we have to address now in Europe? Well, I think that these two are the next EU budget that the Commission will table on the 2nd of May, so next week, and the long-term vision of the EU's climate and energy policies that will be presented as long-term decarbonization strategy, most likely this year. And that the European leaders, as you know, the European Council, a couple of weeks ago, invited the Commission to come up with. So these are the two forward-looking challenges. Without getting ahead of myself on what the MFF will include, I think that we will be building on a very important principle that is already included in the current financial perspective up to 2020, which is climate mainstreaming. Climate mainstreaming means that in the current budget, 20% of the budget, it has to be climate relevant. How does this relate to the different programs? Well, Horizon 2020, the research and innovation program of the European Union, 30% of the budget is currently devoted to climate and clean energy research. The greening of the common agriculture policy is another important example. structural funds. Around 35% of the structural funds are being devoted to energy efficiency. So this is the current principle. What about what's going to happen on the 2nd of May? I think that this commission will build on this principle, and since the political discussions are still going on and there's no formal proposal, I cannot anticipate what will happen, but I'm pretty sure that climate, clean energy will definitely be a very substantial chunk of the EU budget for the next few years. And last but not least, the long-term decarbonization strategy. Well, this is, to me, single-handedly one of the most important and politically relevant documents that this Commission will put forward when it comes to the future of climate and energy policies. Why? Because what we are now at this point reflecting on is how we as Europeans can achieve our Paris Agreement goals, our 2050 decarbonization objectives in a cost-effective manner, unlocking investments and make sure that we keep the technology leadership that we're striving for. This is exactly the kind of exercise that we are now discussing. This vision will be underpinned by analytical work and modeling, as we call it. But the most important thing is that what we want in this paper to basically give to all different stakeholders is a very clear, cost-effective pathways towards a long-term decarbonization strategy and a vision. Not only we're doing this because we're bound by the Paris Agreement, Article 4, saying that all parties are or commit to present their long-term decarbonization strategy by 2020, and also because our leaders mandated the Commission to come up with this strategy. But we are also doing this ahead of others. We will be the first major economy to come up with a solid long-term decarbonization strategy so that we can make sure that we're ahead of the curve. That strategy, I think, I'm sure it will have a long-term consultation process, so there's going to be a public consultation. And we are looking forward to gathering all your inputs from the environmental perspective to the business perspective, academics perspective. We'll need to make sure that whatever we build, it is the joint vision for a carbon neutral future as we want it. I think I'll leave it here. I have not touched upon the security aspects of the energy security aspects of this, of all the work we do on energy as well. But maybe a very quick reflection on that. For some parts of the world, decarbonization poses big challenges because of the abundant fossil fuel resources. For Europe, it should be on the other way around. We do have little resources. Or a few resources when it comes to fossil fuels in Europe. We don't have much oil. Gas is, as you know, domestic gas is on a downward trend. We're importing pretty much 65% of all the gas that we consume. The trend is decreasing. So yes, we have coal, but coal is becoming economically unviable. So what is the alternative for us as Europeans in this small appendix of this big continent? And the Commission's vision is that saving energy and producing energy here, it is definitely the way to go when it comes to energy security. Of course, diversification in the medium long term, it's extremely important. That's why, as you know, we are trying to get different suppliers. So no more gas for 2050. Or 2030, but different sources of gas. It's a different exercise. I think I will leave it here, and I'm very happy to looking forward to the discussing with the rest of the panelists and take some of your questions. Thank you.
Thank you very much. Thank you, Elsa, for your very clear intervention. I think it's worth highlighting that the Commission is aware of that regulation is not enough, that we need to unlock, as you have said, investment. This is a very intensive process in investment. And that obviously that the Commission is also aware of the cost-effective path towards the carbonless economy. Okay, Alexandre, the floor is yours. Okay.
Thank you very much. Good morning, ladies and gentlemen. Thanks very much again for the invitation this morning. So I'll bring the business perspective to the discussion. So Business Europe is the umbrella association for industry at large at European level. So speaking for the full spectrum of industry and businesses, when we talk about the energy field, talking for the energy providers, the users, but also the technology providers, et cetera, et cetera. So, and for us, what is extremely important is to make sure that the transition works for all the spectrum of industries. So what we think is the energy, well, not only us, I'm sure all of you and colleagues in the panel think that the energy transition is an ongoing process. And what I can try, I will not be exhaustive, but I try in a few minutes just to pick a few things, important things for us where we are today. But having in mind that this is an ongoing process, which is going to last for years and years. So a few comments. I think first on the, in a way, on the economics, and it has been already mentioned to some extent by Isaac about, so the energy mix at European level is changing. We see, of course, more renewables coming into the grids, with differences according to member states, of course, but the overall mix is changing, and we see as well one of the, I'm not sure if this is the consequence, but something that is related to this, of course, is, and again mentioned, this is always difficult to be after you, Isaac, because then I have to not repeat too much what you have said, but the deeper integration of the markets is of course going on. Still a lot of work has to be done, but it's definitely moving in the direction of closer and closer integration, coupling among the markets. What we see as well, of course, is reduced cost when it comes to a number of technologies, including renewable technologies. I just had a discussion with colleague from Wind Europe today. He was telling me about offshore wind, which remains, of course, more costly than onshore. But in the last 3 years, cost for offshore wind went down by 30%, which is quite a significant change in terms of cost. So costs are going down for many of those technologies. So this is another important factor that is happening now, and probably quickly than ever thought, even a few years ago. What we see as well is the carbon price. You've talked about the carbon markets, Isaac. So the carbon price are going up as well. So I think I haven't looked this morning, but we are probably still above 13 euros. I think so. It's fluctuating between 13 and 14 euros for a couple of times now, but it has definitely significantly increased or substantially increased in the last couple of months, and this was to be expected, and this is of course necessary. So this is of course another trend that is impacting and will continue to impact a number of investment decisions. The other one, of course, which you know, I'm sure, is about the energy prices that we pay in Europe, that we industry pay, but citizens as well, even if there are of course differences. But the fact that we, when we talk about the end prices for consumers, that we pay significantly higher than in a number, not in all, but in a number of other major economies across the globe. And of course, this has an impact on. This is not the only factor impacting the competitiveness of a number of sectors. I'm not saying that, but this is one of the factors that has an impact. So this is not exhaustive, but a few, I believe, important trends that we see from the industry perspective happening now. Then when it comes to the policy, I think I don't have much to say on what Isaac just explained. The only maybe comment I would make is, and I'm sure you would agree with me, this is an ambitious one. This is probably, when we talk about the 2030 framework, policy legislative framework that has been put forward by the Commission and is now being adopted by Council and Commission, is an ambitious one. Probably, if not but among the most ambitious policy framework that we have across the globe. So, and for good reasons, but this is an ambitious one. And now the attention, once everything is adopted, has to be also very much on implementation of what has been agreed. And sometimes, especially here in Brussels, we start thinking about the next legislative cycle or legislative policy even before implementation on the ground starts. But of course, for business, for companies, what will first matter is implementing, being in order to implement the policy that is being finalized now, and again, which is an ambitious one, which will require from industry very high investments. So, all of this to say very briefly that industry at large for years already is very much deeply engaged in the energy transition, and will continue. Will continue, of course, in the future. What we think is, of course, extremely important is and I will explain this when we look at opportunities from this energy transition and challenges. What we think is extremely important, and always the challenge also for policymakers, is to keep the balance in check when we talk about opportunities and challenges. So a few examples, again, not being exhaustive, but a few examples on opportunities, what we think are real opportunities from the energy transition, from an industry perspective, and a few examples of challenges. First, with opportunities, I think the first one I would like to mention is simply the Paris Agreement, because this is, even if probably, like always, not perfect, but this is really, at least this is the way we see it, really has an agreement that, if properly implemented, is going in the direction of scaling up ambition in terms of emission reductions by all countries across the globe. And of course, this is important also in the perspective of what Europe represents in terms of global emissions. We are, I think, about 10% now. And I don't remember exactly by when, but we are probably in the next, 5 to 10 years going to be only 5 or 6%. So Europe's emission will anyway become more and smaller and smaller compared to the rest of the world. So more ambition by other countries across the globe is, of course, a must. And the Paris Agreement brings this dynamic. Of course, challenges. Because what is happening in the US, this is, of course, not nice, and this is not what we were expecting after the Paris Agreement. But we have to live with this for some time, and there are, of course, ways to overcome some of the situation now, but also challenges because of implementation of this Paris Agreement. You probably know a lot of discussions now about this rule book, and hopefully we'll see by the end of the year in COP24 a final decision adoption made on this rule book for the Paris Agreement, which is extremely important for the good implementation of this. And we know there are, you know better than me, but I know as well, there are some challenges in finalizing this rule book. So Paris Agreement, one of the opportunity. Second opportunity we see from the energy transition is the very large scale of technologies that we have at hand. If I pick one example that we are now very much discussing in Brussels, because some legislations coming soon, the transport sector, a range of technologies are available, and it's in terms of the different fuels, of course electrification, but also the different fuels available, in terms of fuel quality, efficiency of technologies and engines, but also opportunities or technologies now with digitalizations, automation, shared models of transport. So this very large range of technologies that we have, and all of them have to play a role, we think, in the transition, and still for a number of years in Europe and outside of Europe. This is a chance for Europe. We have to capitalize on this. This is also what makes Europe, we believe, more resilient and more flexible in adapting to the transition. So that's the second opportunity. The third one is the global market for so-called, I'm never, like probably many of you, not a big fan of the term green technologies. It's very sometimes artificial and difficult to define very precisely, but to put it simple, the global market for green technologies is expanding, will continue to expand. Was looking at figures in a number of studies recently, so it's forecasted to be between 1 and 2 trillion euros per year by 2030. That's just a few figures. So this is, of course, an opportunity for European companies to be a strong player in this global market for green technologies, knowing, of course, that others will and invest as well very much, thinking about China, for instance, in order to be strong players in this market as well. So opportunities, but we have to fight hard to be on the scene. So there are three opportunities. I go quick with highlighting now three challenges that we think have to be kept in check extremely carefully when we manage the transition. The first one is, it has been mentioned, I think already, to keep things and the transition cost effective. I know this is then it has to be more precise if we want to be very concrete. But for us, when I mentioned before the challenge of energy prices, it remains. It's nothing new. We know we are discussing this for years and years. It remains a major issue for many sectors. So that's a challenge which we have to continue address and find, I would say, even more solutions than what we have so far. The second one is the huge investments we need for this transition. We still need for this transition, and here, yes, the European Commission has proposed a number of initiatives that helps definitely. Again, without bombarding with figures, but the one that I wanted to mention is we are probably, in order to reach the -40 CO2 emission reduction targets by 2030, we have to fill an investment gap of 180 billion euros per year. So again, this is it's maybe sometime better, and I should do the exercise also to put this in perspective, but huge, basically huge. And so the challenge is to bring those investments in Europe again, because others will also look for many of these investments to be made outside of Europe. And many of the companies that we are talking about are global companies which can easily decide investment in or outside of Europe. So we are, of course, better equipped having those investments being placed in Europe. That's the second one. And then the third one I quickly mention is, and this is, I suppose, not a surprise, policy coherence. Of course, we talk about a number of legislations, policy. We sometimes have questions how consistent everything is. I think it's today there will be the second trilogue on the governance proposal, where the question of at least keep in monitoring the interactions between the carbon market, ETS, and other legislations at European level, but also between the European and the national level, we think is extremely important. The monitoring is nice. Action is also, of course, important. So this keeping everything in coherence is, of course, quite a huge challenge. But we definitely think things can be still improved here. So, in a nutshell, some opportunities definitely we see from the energy transition, some of the challenges. So I think in conclusion, I would say a few things. The first one, this transition will continue to intensify, of course, and which means the opportunities, but the challenges as well will intensify. So this is now very much even more a question of managing everything, but definitely on an industry side, a strong will to be part of this transition and very often bring solutions. What we think we need for being fully part of this transition is a true industry strategy at European level. And by mentioning an industry policy, I mean this is not just about one or two sectors. This is not just about regulation. This is also about the enabling framework that you have mentioned. Absolutely. This is also about how you make sure that in Europe you maintain or you develop, you strengthen the strong value chains that we have, that exist, and which very often combine, for instance, renewable and manufacturing industry. I think the wind sector is using per year something like, I have to check the latest figure, but more than 1 million tons of steel. And better to have this very strong being manufactured in Europe. So industry's policy is also about making sure that we strengthen the strong value chains we have in Europe. This is about many other things. This is for sure about research and innovation, which has to be extremely strong. This is probably, if we have to pick one, the field where even more efforts have to be made. And here my final word. Yes, we are next week, or the Commission will put on the table next week the MFF proposal with the proposal on FP9. I'm a bit worried about the figure for FP9, the flagship research program, in terms of money that will go into this program. I'm a bit worried that it's not going to be sufficiently ambitious. And I'm even more worried about the fact that in the program, the so-called industry leadership pillar is being put into question. If we are all in agreement that industry is a strong player in the transition, has to play a role, and then in the flagship, and we all agree that research innovation is of course extremely key, and then in the flagship project or program at European level about research innovation, which cover also energy and climate, we are putting aside the role of industry. I'm a bit worried this is going in absolutely the right direction. And with this, happy to take the discussion later on.
Thank you very much.
Thank you.
Thank you very much. Well, I'd like to point out some of your ideas. I think it's very interesting that the transition should work for all, and this has been your first question sentence. I'd like also to underline that the European Commission approach is very ambitious. Perhaps we can debate about that, especially taking into account that the level of development of the different technologies we have is very different. So it's true that we have a huge range of technologies, but not with the same level of development. Some of these technology probably do not be in the future. And finally, I would like to highlight the combination of opportunities and challenges that you have mentioned. Okay, thank you very much, Alexander. And then, Christian, it's your turn.
Yeah, thank you. First of all, thanks the Martin Center and the FAES Foundation to invite us to here. It's the privilege of the last speaker, can already comment on some of the points that have been made and also skip some of them which have been made. Maybe I start with you as the moderator. I think we are now beyond the energy transition. And that has been sort of the notion for the last 10 years. Now we are really talking about the low carbon economy, the low carbon or decarbonization, if you want it, that point, to achieve the Paris Agreement, but also to make the industry fit and resilient to this low carbon development, which really will start kicking in 2030, 2040, where high carbon options are not really options any longer. So we are moving away the debate from carbon reductions towards the development of new value chains, and that has been developed here already on the panel. Now that's very nicely epitomized by the 2050 vision, which Isaac was mentioning here, which I think is important, will be a very, very crucial junction for the EU climate policy, and even for the EU, I would say. I think the vision will be a success when we have a pan-European debate on where Europe wants to go. I don't know how the Commission wants to do this, but the political party and the local governments and the national governments will have to play, the parliamentarians will have to play a big role in triggering this discussion, not having disconnected national or sometimes even regional discussions, but really thinking how can also this region and that benefit from that. So I'm having here a bit of a query about Isaac. You said about this vision should be about the cost-effective options. Now, that's nice, but I mean, if the vision becomes a very sort of technocratic, marginal abatement cost curve driven allocation of who does what, we are not going to have this debate. We're not going to have a European debate. You need to look it forward and say, what is in for my region, how do we figure in there, etc., etc. So if it is a sort of a remake of the EU 2050 roadmap, which we had last time, I don't think it will be fit for purpose. And to some extent as well, I would have hoped that we had more of a political discussion as well on the clean energy package for all. It was, again, a very, a fantastic package, but there was no real discussion, political discussion around there. So I think somewhere we will have to have it. Maybe just one more point on the cost effectiveness. I think we should learn a few lessons, or maybe one. What was the most cost effective policy we put on in operation, which was the ETS? 10 years, not much happening. What was the least cost-effective policy we put into place? In addition, in the beginning, it was renewables. It took off in the beginning. It took off, and massive investment there. So, I mean, is the cost-effective really the kind of right notion? I think what we have learned from the first lessons, what works at the national, at the regional level, etc., is probably has more traction. The cost-effectiveness, yes, of course, should always be a part. But what we have seen is the least cost-effective at the beginning, at least in the beginning, was the one which winning and the most cost-effective, not the ETS. No, I'm not advocating now less, but we should keep that in mind. Maybe a couple of points as well. What we have learned from the past. I mean, the power sector is the largest contributor to decarbonization at the moment. It's initially through policies, but now costs of renewables have come down to that such a way that is driven by now renewables are competitive, so the market drives it, and if we do a proper framework, they will sort of continue to play an important role. Interconnectors play a role, etc., etc. You mentioned that. Transport contributed so far little, except on the passenger cars, you know, where they stabilize the emissions. So there is a lot to be done. It's on its way. Buildings contributed a lot. Our buildings are now 13% more efficient than before. Again, because of policies, fiscal support, regulation, eco-design directive, and so on and so on. You can mention it. And the big story is, of course, then industry. What is going to happen with industry? I'd like to mention this. Also, I think it's worthwhile to have a bit of a reflection in the vision about the energy policy, the efficiency policy post-2030. I think at the moment it's a very good bet up to 2030 to have a lot of high energy efficiency policy, ambitious one, because it reduces emissions, reduces demand, reduces the investment, which is all economic beneficial. But after 2030, when we have a lot of renewable, a lot of low carbon energy, and the low-hanging fruits have been reaped, you know, is energy efficiency policy then really the policy we want to do? If you look at deep renovation of houses, this is expensive. So there may be less expensive options, maybe if you do some good arbitrage, if you create a framework where you have some arbitrage between the demand, I mean energy efficiency, and the supply, in terms of, you know, what is more cost effective, because if you bring in a lot of supply which is low carbon, you know, what's the problem? Actually, it may be also economically benefit. Of course, we need to keep the electricity or the energy costs and prices low. That is of course a precondition for all of this. So what will we probably see in the future? We will see an acceleration deployment, a lot of new renewables. It's economic, and it will be, whether you like it or not, the backbone of the new energy system. It's just competitive at the moment. Yes, there will be other molecules-based carriers also important, but it will also go into mobility and all this, and we're discussing this. The long-term sustainable investment framework, of course, that's important, but let's not overdo it. You know, we have 27 member states and they all have their little regulations left, and there we are a federal system. Laws keep always changing. Of course, that should be predictable how they change, but also we will have technological disruption. You know, how could you foresee what happened in renewables? You could have not put a framework for 2025, 10 years ago on renewables. It just was not possible. You will see many of these disruptions. Just imagine, we have CCS or not. I mean, it makes enormous difference on your investment frameworks. And that brings me to another point, which is actually, you know, biggest challenge probably for the European Union and for the industry here and for the Commission, if you wish, is, you know, where do we create this demand for low carbon products? I mean, internationally, I mean, yes, we can produce low carbon steel by 2040, 2050, but will there be demand? Because they will be competing with less low carbon steel. But also domestically, we can probably have the technology to create low carbon liquids. But you need to somehow create this demand. You need to create this demand, and you will need to put frameworks into place where there is a demand and also a reasonable proposition for the investor. You talked about the unlocking investment, reasonable proposition for investors to invest in, let's say, new refineries or whatever you want to invest in, you know, that they be sure that actually their low carbon or their low carbon steel, low carbon what have you, will be asked. And that will need a framework. We cannot just have feed-in tariffs for everything. That, of course, would be a solution, but that seems a little bit expensive. So let me maybe spend the last 2 minutes on the industry. maybe 3. No, I mean, industry, a lot of the economy will be electrified, and, how much and how quickly, that's a political debate to some extent, and how much targets we have. I don't want to get into this. No, some of the industry can be electrified, the steel industry. You could shift from basic oxygen furnace to electric arc furnace with or without direct reduced iron, so there are possibilities. Now, that will make steel more expensive. The figures we have at the moment would be plus 80% or something like this, in that order of magnitude. But be aware, if you do this, you need a lot of electricity, a lot of low carbon electricity, which again puts you a lot of material use. You need a lot of steel for your windmills, a lot of for the panels. You need a lot of other materials, copper. You need reformers, transformers. All these materials will, and this is a major infrastructure investment, and you want to. That will only materialize if you're sure we really need it. People are not just massively investing in this now, but other industries cannot be, electrified, and like cement. Chemicals can be to some extent refining. They will need other solutions, and there are 2 solutions, and only 2 at the moment. One is carbon capture and storage, CCS, and the other one is hydrogen. Now, carbon capture and storage, we have been discussing, and I have the benefit of being a bit older. We have been discussing this for the last 20 years, and it seems always to be coming, and it's always still to be coming. And I think you probably put carbon capture and storage in your roadmap, in your modeling, but the question of whether this is really coming, when you still look at the projects, the speed they're coming in, except maybe on the Norwegian side, it doesn't look too good. But I mean, I'm, happy if it comes, but we should be careful. Then the other way would be the hydrogen. Now, hydrogen requires, again, a lot of electricity. It has conversion losses. It has major conversion losses, and then, of course, the economics are not still there. So, in the end, you will see sort of a race between some electrification, and also the technologies around the electrification probably are earlier, and then the hydrogen, there will certainly be, or for carbon capture and storage, there certainly will be a market. Hydrogen you need possibly for seasonal storage. I don't think the electricity system, we can do the daily, weekly storage flexibility, but the seasonal storage will be very difficult. You need molecules for that. So there you will see a market, but then it all depends on price, again, price, availability, and convenience, and that will find its market, and how big that market is, we really don't know. So I would like to finish here, but just with a plea to all of you. I mean, let's have a political debate on this EU vision, and if you all do it well, we might have actually a pan-European debate. We didn't have a lot of pan-European debates recently, at least not in a constructive way, so that might be quite an interesting area where we can have once again, having something on the European perspective on the front lines, on the front pages of the newspapers. So thank you.
Thank you very much, Christian. Okay, only to underline some of your conclusion. Christian has talked about the different contribution of the different main sectors, the power sector, the transport sector, the building sector. I'd like also to point out that not all industries can be electrified, and then we have to find out solution to that industry. Okay, it's time to the debate. First of all, I don't know if you want to say something about the intervention of the other panelists, or directly give the floor to the audience. It's your turn.
Maybe the audience.
Okay.
Yeah, I can.
Yes.
You give me. You allow me to.
I mean, he's the
Yes,
boss.
absolutely.
He's the boss.
I'm the boss here.
Yeah.
Okay.
Okay. No. So maybe quickly, just one or two, mainly on what Christian you said. Just said. So I know your point was not about what you think is best, but your comment about ETS being cost effective, working less, and feed-in tariff being least effective but working better, impacting more, if I understand correctly. That's a reality.
Yes.
Agree. But of course, everyone has to be aware of the cost implications of this, of course, and this is what we are constantly mentioning to also to policymakers to be attentive about, make sure, even if the impact is maybe a bit less quick and strong, but make sure that you balance properly the cost and benefits. So just want to say this is exactly what we think needs to be paid more attention in the future, especially because many things will intensify in the years and in decades to come. So that was one. Second was about the political debate that you've mentioned on the long-term strategy, the mid-term strategy, which I can agree with you. But this is why I'm sometimes struggling to understand why. Because you said the mid-century strategies by all parties have to be pledged or tabled by 2020, and now we are putting the EU in the position where, in a very short period of time, you have to come up with the strategy, while in principle there is time to do it. So I at least hope that what is coming to be published by the Commission in November will not be the end, but the start of possibly this political debate. The debate can happen in the next couple of months, but it will probably require more time. So not a end, but a start with what the Commission is going to publish in November.
Okay. Any more?
I think we
Okay.
should give it.
It's time to give the floor to the audience. There is a question. Thank you.
Hello, my name is Dominic. I represent Statoil. First of all, I must say we really welcome that the debate on EU energy and climate policies is finally moving beyond the 2030 horizon towards the 2050. In a way, you could describe it as some sort of a decarbonization tunnel across one mountain. From one end, you dig the energy efficiency policies, the electrification policies, which are going ahead, going fast, and which are successful, and this is what the 2030 package is all about. But then we have the other end, which is more difficult, and this is what Christian suggested at. So the energy-intensive industries and the two solutions we have there at the moment is CCS and hydrogen. As a player who sees its role beyond 2030 in helping Europe to decarbonize the energy-intensive industries, we have a couple of projects ongoing, and to us it becomes a question of mostly the ETS and the incentive policies for decarbonizing the energy-intensive industries. First, on the ambition to decarbonize natural gas via hydrogen, we have concrete projects in Netherlands, which seems to be the most ambitious state in helping to deliver this. We see also some growing support from the European Commission on this side. I mean, we have been recognized with a PCI for the transport of CO2 from Netherlands and the UK to store large capacities of CO2 in Norway for permanent storage. The Norwegian government perceives its role as a player who could provide these permanent storage solutions to Europe. And it is considering to take a major investment decision next year, 2019. Now the question is Europe serious about this commitment towards CCS? And would it ever consider storing its CO2 capacities in Norway? And if yes, then of course the chances of the Norwegian government making a final investment decision next year become much higher. So things are advancing here, but you need to see also some policy incentives at the EU level, and here I'm pointing mostly at the ETS price and the recent discussions that the French and the Dutch governments are pointing at, which is the carbon price floor. How is the Commission looking at this, and could we envision having a carbon price floor at some point down the line, which is so crucial to decarbonizing the energy-intensive industries where electrification is not possible? Thank you.
Christian?
Yeah, I mean, there is, what the Commission price floor view is, I mean, that's Isaac knows, and I think we all have an idea of what it might be. I think he just, I would just, make this point again with the ETS. Yes, I mean, let's just be realistic. We keep coming back to the ETS. That's the policy, but politically, it seems to be very difficult once you come to a certain price level. And I think interesting part is really when you bring different industries in the room, and then you have the supply. Of course, it works very well for energy supply, gas, and electricity. Then you have the materials, which for them it's a major cost, and then you have the energy, the electro-intensives. There are three different sectors, and we have them all in the room. You see already why the political potential of the ETS might be limited. I'm in favor, and I did. I probably wrote 20 papers or more on the ETS, and we worked very early since 2000 on this. But when you look at the history of it. And there is a real blockage. I don't see how we can unlock that blockage that you get really to the CO2 price you would need for your CCS project. I cannot see it. What the ETS now has become, to some extent, a mechanism for compensating the electro-intensives. That is working very well. The free allocation compensates the materials. This works also very well, but of course the backdrop of this is we are not going to get the reductions. So let's think about what role the ETS does. It certainly has an important role until 2030. There is no doubt, and the higher prices will make a difference. But these big, large industrial things, there I think we really need to carefully look what the ETS role will be.
Okay, sir.
If I can maybe quickly react to Christian's points and a colleague from Estado, who I think I know from Commission's previous pastor. I think it rings a bell, right? Yeah. Very quickly, on the carbon floor price, I think that politics are the art of the possible, and at this point it's not possible. If it had been possible, there was a very good opportunity to do that, and that was the post-2020 ETS reform. And yes, the Commission did not propose a carbon floor price, but all those countries advocating for one could have formed a coalition. It didn't fly, it didn't happen. Does it mean that it has broad support in Europe? It doesn't. At this point, it doesn't. What about the ambition and the reductions? I think what Christian just mentioned, that if you don't fix the ETS, you will not get the reductions, the emissions reductions. I don't necessarily agree with that. The ETS is delivering emissions reductions because it has a fixed cap, and as you know, it's just is decreasing. So there is emissions reductions. The only thing that we needed to fix with the ETS, it was the carbon price and the excess of the surplus of allowances in the market. This is a totally different thing. So how you create the incentive for the low carbon transformation. And that is what we're trying to do at the moment. Carbon floor price is a tool to do that. So is the market stability reserve. So an adjustment mechanism that prevents surplus of allowances in the system. And that is what 28 member states have agreed on. We think that this can work, and this is what has gained consensus at European level. So let's bet for that. I know that, for example, President Macron, a couple of weeks ago at the European Parliament in Strasbourg, mentioned again the carbon floor price. Well, I mean, France should definitely keep pushing for the idea and try to get other countries on board. At the moment, this idea is, as I said, is not flying, but we are not opposing or rejecting the idea. But it has not brought support. On CCS, very quickly, CCS, that will be part, of course, that has always been part of the discussions on our vision for 2050. But it's disappointing to us that CCS has not taken off at the scale that we would have liked to see when we first drafted our first decarbonization policies. A number of factors. One of them is the low carbon price. You need at least a €50 carbon price for CCS to start becoming economically viable. This is not happening. Hopefully it will happen soon. But at this point, betting exclusively on CCS or not exclusively, but largely on CCS is not what we see as a mainstream decarbonization policy. This being said, though, I mean, of course, investments of such, and that's why it's been recognized as a PCI project, and technologies are very much welcome, and we will try just to keep pushing for them as much as we can. And a very final point on the long-term strategy and the need for a public debate that colleagues mentioned. What we are planning to present this year is not a prescriptive one single strategy for the European Union in the future. What we are planning to do is to look at different scenarios on how Europe can decarbonize its economy, and then take into account the new reality of the well below 2 degrees and the 1.5 degrees and different tools. So indeed, the whole idea is to create a debate among political leaders, amongst business leaders, civil society, environmental organizations, local, regional level, for them to say, this is what we want as the long-term decarbonization strategy. Leaders, get us there. Yeah, that would be it.
I think this is a very, very important point because at least in Spain, I feel that the political debate needs some order, you know, because there are very, very different ideologized stances, and I think this paper from the Commission, the European Commission, could be very useful. Alexandre?
Yeah, very, very briefly on the ETS. So, well, I think first we should not give the impression that free allowances are just there to avoid additional efforts by the covered sectors. I think they are legitimate, necessary, of course, and they are there for very good reasons. So I don't think there is any. And as mentioned, it's delivering because of the cap being reduced. So I think with this, the impression should be the right one, or the message should be the right one. And of course they are being reduced as well over time. So that's one. Then just personal comments on this one. I'm probably less an expert in ETS than you have been many years working on this. But just very simply, I mean, we have been through a long process of revision. It has been over almost 2 years of discussions. Agreement has been found. It's now delivering, and we see the impact on the price. So of course, the discussion about carbon floor price is going to very likely impact on confidence that exists now better in the system. So that's of course I think something that needs to be extremely carefully considered, that we don't again put into question a system that now is working better, has been reformed and now is working better. Not saying this is perfect, but let's be extremely careful not put this too much into question.
Can I just say one quick point? Yes, no, I agree with you on your assessment of the ETS. Don't get me wrong, but I mean there is a compensation, mechanism, free allowances, and then there is a a compensation mechanism for electro-intensive. But this you cannot go on forever with this. There's less and less free allowances, and of course, as the reductions get steeper, the bill becomes bigger and bigger. So yes, it can go on for a little while, but at some stage, you need to see what you're going to do, and that was a bit my plea. After 2030, we should see how we get to this kind of bigger reduction. So please don't get me wrong on this.
You have said that there is an expected reform of the ETS mechanism, or not? I've understood.
No, it's just been concluded. The post-2020 ETS reform.
Not again.
Yeah.
Any more questions from the audience? I'd like to go back to your intervention. You have talked about hardware and software, especially related to interconnection. It's true that we don't have yet an energy union, but I would like to know or your opinion about the necessary timing of this combination, because at least in the case of Spain and France, for example, there is a big differences in terms of taxes, for example, and then it's obviously we need interconnection, but interconnection are expensive. Could be a way of distorting the Spanish market, because in Spain utilities, companies producing electricity are let's say have very, very high taxes with regard to the French ones. So how do you see this timing? Because if you don't trigger the necessary harmonization, perhaps the investment are not profitable or are not attractive. So which is the timing in the head of the European Commission?
Well, the Iberian Peninsula case and the Spanish case in particular, it's they're very sui generis when it comes to interconnections, and the geographical location, of course, plays a big factor, big role there. First, let me start by saying that when it comes to harmonizing energy policies is one of the most challenging jobs that the EU has, because or the Commission basically has to do, because most of the time we don't have all our tools at our disposal, and one of them you mentioned is tax. I mean, I wish we had some tax competences within the Commission that could accompany our policy objectives, but this is not the case at the moment. So it is true that interconnections have to be a two-way street. It cannot be that because the one country wants to sell electricity produced by renewables to another country, or the other country wants to sell the electricity produced by nuclear to the other country, they cannot get to some sort of agreement on the benefits of it. We have, in the case of the Iberian Peninsula, we have tried to make sure that both countries and their TSOs and the electricity operators understand that there is economic gains in linking markets because of the downward pressure that free-flowing electricity will have in the system. That means also cheaper prices for consumers. All the economic analysis and modeling that we have done in the Commission and impact assessments on the three main or four different electric cables that are now being built or very advanced stage point towards reduce costs, both for companies, for utilities, and for consumers. As I said before, I mean, energy policies are one of the most difficult policies because basically you have to touch the heart of the sovereignty of a country when it comes to long-standing traditional monopolies of energy generation and production and transmission in countries. And it is really challenging and is really difficult. But I think that we've made a lot of progress. And for example, when was that? I think a few months ago, I don't recall exactly the date, I should have, but I don't. The EU, the Commission, gave a grant of 578 million euro to the Biscay Bay interconnection between France and Spain. That is 1/3 of the total cost of the project. And that will de facto mean that for the first time ever, Portugal and France will have a high voltage interconnection, submarine interconnection electricity link that can definitely make sure that, for example, the northern part of Spain, when there are surplus of produced electricity, they can sell it to the neighbors. In this case, that would be France. And then France can do the same thing to the Spaniards. And then you create a real market of electricity interconnections. So this is what we have tried to do in Europe. But as I said, I mean, it's a very specific case in one of the Iberian Peninsula. In other parts of Europe, like the Baltic countries, they have all their different challenges, like their electricity system is not synchronized with the continental system, and is still synchronized with the Russian and Belarusian electricity system. So it's a total different challenge. But we are also trying to solve that through hardware and software. Hardware, interconnection in Poland, and software with changing, basically revamping the whole network system of the Baltics. So you said timing. Well, timing couldn't be any more appropriate, because if you really want to make sure that this transition also has the backing of local municipalities, citizens, they have to see an impact in prices, and it better be downwards, because this policy has always been associated to expensive policies. Environmental policies are always seen as expensive. Yes, for many years we have been saying, yes, but in the long term, you'll see all the benefits. Well, we better start seeing them now. Yeah. And that has to be translated in lower energy bills. And we do believe that interconnecting and linking markets is definitely the way to go to see that.
Okay, there is a question.
Thank you. My name is Joël Mechelaars. I'm representing Wind Europe, the European Association representing the wind energy industry. I wanted to share a comment and I have a question. First, a comment to bring some positive elements into this discussion. I think the session description talks about this new economy, and I think this new economy is becoming a reality already. If we look in the real world, look at many large industries which are signing big corporate power purchase agreements. They're sourcing green electricity. This all started because companies wanted to be green. Google, Amazon, Microsoft signed these deals in the Netherlands, in Ireland, and elsewhere. But now it's large energy intensives. In Norway, we see Alcoa, the aluminium smelter, signing a direct deal with a wind farm. We see the same for Norsk Hydro, which is doing that with what will be the largest onshore wind farm in Sweden. And I think we need to make sure that these deals can also be signed in the larger markets. It's not happening yet in Germany. It's not happening in Italy. It's not happening in Spain or in France. So I think that's a key element to work on. But then we also see electricity going into their direct or indirect use by large industries. We see good development that Vattenfall is now working with the steel industry on what could be the first zero emission free steel in Europe. We could be leaders there. And we see just here outside Brussels, Colruyt, a large retailer, using hydrogen from the excess electricity from their wind turbines to use that in the forklifts. So there are already many elements out there that industries are using. And all of that growth in not just wind, but also in the rest of the renewables industry, is bringing major economic benefits, not just to the renewables sector, but to the wider industry. In wind, every €1,000 invested, 25% goes to chemicals, goes to the logistics sector, cement, transport, electronic components. So for us, it's all about having that visibility and that clear build-out plan that allows us to lower the cost of finance. I guess, Alexander, many of that is the same for your members, so maybe you can share some perspective on that. And that leads me to my question. Next week, we'll see the next MFF being announced, and of course, it will be about the main headline targets, and much of that will, how we'll spend it depends on the sectoral policies. But maybe some of you want to shed some light on how the next MFF could and should be deploying, could provide some solutions for more deployment and more development of these solutions, so that this new economy can only be accelerated, not elsewhere in the world, but mostly here in Europe, so we can remain industrial leaders in that regard. Thank you.
Okay, thank you. We are going to make the last question there, and then to answer, because we have only 5 minutes left.
Okay. Christian Korre from the European Parliament Research Service. I have a question. When we talk about energy markets in Europe, you're talking about interconnections, and I think they're very important. But for me, the basic functioning of a market is fluctuating prices. When there's a surplus in apples, prices go down, people buy more apples, and prices go up again. In electricity, we don't have that. The problem is wind and solar produce most of the electricity when the price is low, because when they produce a lot of electricity, the price is low, and there's no incentives for people to buy electricity exactly at that time. Consumers, people with electric cars, they pay the same rate at 12, at 1, at 2, at 3 p.m. I think there's a huge potential to unlock if we really build a market with fluctuating prices that provide incentives for people to adapt their behavior, that will make solar and wind energy more attractive because they can sell more of their energy, and it will also make it interesting for people to have electric cars if they can charge it basically for free at certain hours of the day. So I think this is a sector that might require much more attention than only to build interconnections.
Thank you. To answer the first question, the second,
Yeah,
the second question was a reflection.
Yeah, I mean, first of all, some of these points are addressed in the clean energy package, the demand response side, and it has not yet gone into the distribution, which is also national regulation. Again, you know, energy policy, it's not the European Commission who can impose on the national distribution companies how they do their tariffs. That is an important part. But I would just put two question marks to your question, if it was a comment as well. The first is, I mean, the electricity in the future is very capital intensive. So actually, the production of the electrons don't really matter so much anymore. So you have a lot of other fixed costs which have to go into your tariff. So in that sense, you know, whether you produce it when there is a surplus or not, the wholesale market element is very little. So, and that might even go further down. Second, we have a very, very low wholesale price, which doesn't give much incentives to almost anything. So actually, electricity is very, very cheap, so the price signal you will not see. But also when you look at what happens a bit in the market, the demand response will rather come from the aggregators and then from the individual consumers. You know, we all look at our smartphone all the time, but I suspect we're looking at emails, SMS, and all this kind of stuff, and you don't want to look at where your electricity prices are. I think companies are picking it up as the market for flexibility increases, and it does with the clean energy package for all. The aggregators will pick up on that one, and they will have a price signal. They will react to the price signal, ask you, why don't you switch off now? Why don't you disconnect your fridge? Why don't you load your electrical vehicles? I don't think it will be the individual consumers. It will be some intermediaries, whatever they will be in the end.
Okay. And go ahead.
Okay, very, very quick on the colleague from Wind Europe. I mean, I met as well Giles Dixon and actually meeting again today. So we are discussing about the agreement between energy-intensive industries and renewable providers. I share what you just said. I think what I like in what you said as well is I think you came late in the discussion, but in my introduction I talked about, in the case of wind, the strong articulation with a number of sectors. You talked about chemical, I talked about the steel. So that's one of the things we have, I think, to also further advocate for, is support in terms of value chains that we have very strong in Europe. That's one. And second, on the MFF, again, you've missed my comments, but here a strong plea on the Commission about, in the MFF, on the FP9, so the next research and innovation program post-2020, needs a strong budget and needs a strong role by industry in different fields, but of course also when it comes to energy and climate. And I'm slightly worried on this.
Thank you, Alexander.
Yeah, quick reaction on the MFF, without really anticipating and unveiling any. I have to be prudent because discussions are still ongoing at the highest political level, and it's all about the money. So it's really what I know is that the next budget is going to support the clean transition in Europe in a way that it has not been seen before. I am convinced that the different clean energy envelopes will be significantly strengthened. I think that everyone, I mean, it's in the mind of all our political masters that the clean energy transition is and needs to be supported. So I think that all the different envelopes, be it research, be it agriculture policy, be it transport, interconnections, you name it. I think that it's environmental policies, of course. I think climate and clean energy will be significantly mainstream there, and the opportunities will be quite significant, let's put it that way. I know that I just cannot be very specific on figures at this point because they're up in the air, but overall, this will be a leaner, greener budget for a new future, yeah.
Okay, thank you very much. Thank you very much, the panelists. I think it has been a very, very interesting debate. Okay, this is the end of this debate. I hope to have set light on one of the most important and challenging topic in the European frame. Okay, see you next year. Okay, thank you very much.
Thank you.